So, you've got some cash saved up and you're ready to put it to work. But you know the drill. One friend is telling you to just buy some big-name stock and hold on for dear life. Meanwhile, another friend is showing you this crazy screen full of flashing charts, talking about trading currencies and making huge returns by next week. They both sound kind of convincing, right? But here's the thing. Choosing the wrong path can be a serious disaster for your finances. So today, we're going to cut through all that noise.
Okay, let's make this real. Forget hypotheticals. Picture that $1,000 sitting in your account right now. This is it, the $1,000 decision. What do you do with it? Where does it go? That's the exact question we're going to break down step by step. And believe me, the stakes are incredibly high. This isn't just about picking some winner for the week. It's about aligning your money with your actual life, your goals, and who you are as a person. Getting this wrong isn't just a small oopsie. It can literally set you back years.
Now, before we even touch the numbers, the profits, the risks, all the juicy stuff, we have to understand the fundamental difference between these two markets. Because what you're buying, well, it couldn't be more different. When you buy a stock, it's pretty simple. You are becoming a part owner. A tiny one maybe, but still an owner of a real, tangible business. We're talking Apple, Tesla, you name it. You're betting that the company will keep innovating and growing over the long haul. You get a piece of that pie.
Now, Forex is a whole different beast. You're not really owning anything. You're speculating. It's like this constant global tug-of-war, a battle of nations. If you think the U.S. economy is going to do better than Europe's today, you buy the dollar and sell the euro. It's a bet on massive global economic shifts.
So, to really boil it down, stocks are about investing in a business to build long-term wealth. Forex is about trading, betting on an economy for short-term gains. One is a marathon measured in years, the other is a sprint measured in hours or even minutes.
All right, now that we've got the basics down, let's get to the main event. Let's put them in the ring, head-to-head, and look at the things that really matter. How much you can make, how much you could lose, and honestly, how this all fits into your life.
First up, let's talk profit. And wow, the difference in speed is just night and day. The stock market is the ultimate slow burn. On average, you're looking at about 10% a year. The real magic isn't the yearly return, it's the power of compounding over decades. Forex, on the other hand, is a flat-out sprint. Traders use a powerful tool called leverage, which is basically a way to control a huge position with just a little bit of your own money. It means you could see massive returns in just a week, but, as you're about to see, that power is a huge double-edged sword.
And that brings us right to risk. With stocks, if the price plummets, it feels awful, but you still own your shares. You can just wait for things to recover. It's much steadier ground. In Forex, that same leverage that can make you rich can also wipe you out. It magnifies your losses just as fast. A tiny market move against you can trigger what's called a margin call, and poof, your broker closes your trade and your money is just gone.
And hey, don't just take my word for it. The numbers here are, well, they're pretty stark. Study after study shows that the vast majority of regular people who try Forex trading, somewhere between 70 and 80% of them, end up losing money over the long run. Now, this isn't to scare you. It's just to ground this conversation in reality.
Okay, let's talk about your actual life. The stock market has an opening bell and a closing bell. It has structure. It lets you switch off. Forex, though, it's a 24-hour-a-day, 5-day-a-week grind. And while that flexibility sounds amazing, it can be a recipe for total burnout, for overtrading, and for checking charts on your phone at 3 in the morning.
So, we've compared all the key metrics. But the final decision, the right decision, doesn't come from a spreadsheet. It comes from you. So let's do a quick little litmus test right now to see which camp you fall into.
You're probably a stock investor if you're playing the long game, thinking 5, 10, even 20 years down the road. You're a stock investor if you prefer a set-it-and-forget-it approach that lets you build wealth without tons of stress. And honestly, if you're a beginner or you have a full-time job and you can't be glued to a screen, this is probably your lane.
On the other hand, Forex might be for you if you're an active day trader type, if you genuinely get a thrill out of studying charts and tracking global news. You absolutely have to have a high appetite for risk, and this is the most important part, unbreakable emotional discipline to handle losses without freaking out. If that sounds like you, maybe you could thrive here. But you have to treat it like a profession, not a get-rich-quick scheme.
But here's the secret that a lot of people miss. You don't actually have to choose just one. In fact, a lot of the most successful investors, they don't. They use a kind of hybrid strategy. It's called the core and satellite method, and it's brilliant. Here's how it works. The
The bulk of your money, say 80%, goes into a stable core of long-term stocks. That's your wealth-building engine. Then you take a small, manageable slice, your satellite, and you use that for higher-risk plays like Forex. This way, you get the stability of stocks, but you still have a shot at those supercharged returns. It's really the best of both worlds.
So really, the whole point we've been driving at is this. The best market doesn't exist. There's only the market that is best for you. Being smart with your money isn't a race to see who can get rich the fastest. It's about finding that perfect alignment between your money and your life.
And that really just leaves us with one final question to think about. Take a good, hard look at your own finances, your own goals, your own personality. Is your money truly aligned with your mindset? That's something worth figuring out.